forward to be speaking with you about the strategic case for embedded insurance. We know that embedded finance and all the related fields are becoming very popular these days. And very often people are expecting financial products like insurance to be part of everyday life without even being seen. And of course, this is part of a bigger trend where everything becomes connected and embedded. And what we're going to do today is explore together with you how this market is evolving and actually what this could mean from an insurance perspective. And we're very happy to actually have some great speakers to help you with that today. So I'm looking forward to introduce them to you. We're going to start with a brief word by Onno Bloemers of our team to tell you a little bit more about our strategic insurance agenda within Holland FinTech. Then I'll give the word to Florian Graillot. He's the founder of Astoria.vc, a VC that invests across insurtech in the whole of Europe. And so he has quite some interesting perspectives on how the market is evolving and what technology companies are currently doing to invest in the embedded and open insurance field. Then I'll give the word to Ruud van Hanswijk of the Volksbank. He's especially active in looking at a portfolio of insurance products as part of their banking proposition, which I think is a really interesting case to dive into. Then I'll give the word to Michael Mackay, who with Nextbiz is responsible of actually looking at the connectivity that's required to actually be able to embed products like insurance in all kinds of everyday digital experiences. So I think we've got a really nice lineup to explore the different aspects of embedded insurance. Besides, of course, letting the speakers give the word give their perspective, we're really keen also to learn how you feel about it and make sure that your questions and your positions can actually be part of the discussion. So that's why we'll be closing off with a more longer discussion at the end. So we'll definitely take some time to answer your questions and look at your position. So feel free to interact with us through the chat, and we'll take it from there. I'm very much looking forward to the session, but maybe just briefly, Onno, could you tell us a little bit about what we intend to do with our program around insurance?
Yes, certainly, Don. And thank you for the intro. Welcome all. Thank you for being here. My name is Onno Bloemers. I have a background in insurance innovation and transformation. I'm one of the insurtech leads in Holland FinTech. And just for a couple of minutes, I'm going to give you a quick update on where we are with our new Future of Insurance track. Now, some of you may be aware of Amara's law. It says we tend to overestimate the effect of a technology in the short run, but underestimate its effect in the long run. And it was coined by Roy Amara, who was a Stanford computer scientist and a futurist in the 1960s. You can apply it to space exploration, to IT, to nanotech. But I believe it also applies to insurance. We all know how technology is fundamentally transforming the way we manage risks, but finding the right pace in adopting and embracing this can be quite difficult. And Amara's law says we are likely to get it wrong. Next slide, please, Don. Now, what we want to do is help to get it right, based on the belief that there is strength in collaboration. New perspectives lead to better decisions on innovation, and this all should contribute to long-term viability of this sector. And that's what we're doing. As part of Holland FinTech, we're setting up a brand new Future of Insurance track. Industry-wide. That means we welcome all parties active in insurance, no matter where you are in the value chain. We are independent and inclusive, as we believe that that will benefit the overall sector. And we connect people and organizations to share their insights, their experiences, their inspiration, not just from insurance alone, but also from related sectors like banking, payments, mobility, critical as traditional sector boundaries quickly fade. Next slide, please. Now, last year, we validated our ideas in a series of roundtables. Some of you here took part in that. Thank you again for your contribution there. The good news is we're now actually on our way. And looking at what's ahead, we're going to cover topics across 4 key drivers: collaboration, with whom you can and should work together; impact, how we can contribute to a better world; transformation, what you need to be future-proof; and representation, how we can help everyone understand. You can expect meetups like this one, roundtables, other activities, both on industry-wide topics and drilling down per segment. We'll also be working on a comprehensive insurtech event calendar, and we're going to set up working groups with our members on specific themes, starting with open insurance. I hope this gives you a ballpark idea of what we're about. Feel free to reach out to us with any question or comment. Keep a close eye on our channels and enjoy our meetup. So, Don, back to you.
Thanks, Onno. Yeah, I'm really happy that we're able to give much more attention to the insurance aspect within the whole fintech space. So thanks indeed for helping out there and setting this up together. I think it's especially if you look at the crossover between all the different sectors within the financial industry. If you go about RegTech, banking, insurance, payments, capital markets, there's a lot of developments that are beneficial to all. So especially making those connections stronger, I think is really beneficial. As we could also see here today, when we actually look about how banking and insurance are, for example, getting stronger connected. Because bank assurance is back like never before as part of the trend of embedded insurance. And of course, now we'd like to take you much further to our following speaker. So, Florian, I hope that you're ready to kick it off and enlighten our audience with your insights about basically flying in a helicopter across Europe and looking at the insurtech field. Tell us what you see.
So thanks again for having me. I will share my screen and a few slides that I gathered around open insurance. I will go full screen. So basically the idea is just to introduce the discussion and share what we see and what we think around the open insurance in Europe. Just a bit of background on my side. So Astoria VC, we, as you mentioned, we are investing in insurtech across Europe. And I would add that we have a very strong focus on seed startups, meaning very young startup, usually defined as post-product, meaning that we can see trends before they become mainstream. And I hope that it helps having a better understanding, especially of open insurance. So the first point around open insurance is that it rings a bell, I would say, at least in terms of things and words, because it reminds open banking. The major difference at this stage is that open banking started with the regulation, PSD2, whereas open insurance, there is not yet any regulation. Let's see whether it happened, and if so, when. But the truth is that it's already happening on the market, which I think is the most exciting part about open insurance. We will see later that there is another word, I think, that says exactly the same, which is embedded insurance. So embedded insurance is the name of the discussion today. Open insurance is close to this one, I would say. It depends on where you look from. If you're a startup, an e-commerce platform, you will majorly, I think, use embedded insurance. Insurance company themselves use open insurance, but that's the two sides of the same coin. So here, what I just wanted to highlight again is that embedded insurance, open insurance already exists on the market, again, despite no regulation. So I really think that it's not a matter of regulation yet. It's a matter of answering the market requests and the market needs. So I just took a few examples. The first one is around car insurance. So this one is in France, Ornicar. This is a driving school online. They are distributing car insurance for young drivers, and they have significant figures already. So it seems that the model works. The second example is around health insurance, Vitality, which has been on the ground for years. They are leveraging a kind of platform, meaning the Apple Watch. But anyway, that's a kind of platform. There are millions of users of this device. And the deal between Vitality and their customers is if you take our product and agree to share your health data gathered by the watch, then you get the watch for free. And the last example that was announced a few weeks ago in Europe is Revolut, including some insurance product thanks to a partnership with Cover. Interestingly, we are not talking about pocket product or things like that, because I think that this is a bias that we hear a lot from insurance companies themselves, is that, okay, embedded insurance, open insurance, it's pocket products. That's not the case. Car insurance, again, it's an entry point, usually for insurance company themselves. So it means that if they start to be cannibalized by this kind of platform, that's a threat. And I could have taken a few examples around home insurance. I put health insurance, things around financials products with Revolut. So again, not only pocket product, but very high margin and high premium policies that could be sold through these kind of channels. And on the right side of the screen, I put two big examples. So Tesla launching their own insurance product last year, IKEA working with Swiss Re on distributing home insurance again. So it starts to be significant. And again, what's the most exciting part is that first, it already exists. Second, it comes from the market. And third, examples are more numerous every day. So here we just tried to have a kind of map, an overview of how things are going, and especially having a look at the tech layer, which is enabling embedded insurance or open insurance. So that's a study that we released recently. Just here a few examples. Interestingly, again, we split it technologies, insurtech player that were mainly addressing platforms. So the platform side, which rings and reminds embedded insurance. And on the other hand, we listed several insurtech players that are on the insurer side, much more open insurance, and basically developing API or enabling API distribution for insurers themselves. So that's the two sides of the market. Again, same trend, embedded insurance, open insurance. But what you can see on that map is that there are already several players working on that space, and there are way more in Europe, which seems to be quite exciting. Then when you have the tech layer, there is usually a challenge that we see among insurance companies is, okay, how to make it happen. And the two kind of best practices that we've spotted on the market, and there is nothing new, it's related to the innovator's dilemma that was written 25 years ago, though still accurate, is that the best way to make it happen is either to develop new products on existing customers, so kind of upsell existing customers, and the other opportunity that we see the most is try to leverage existing products toward new segments, and especially the idea is to target a broader customer segment with existing products. Again, distributing through platform could help move from, let's say, high-end customer to maybe mass market or younger drivers and so on. Thanks to technology, you manage to be profitable even with lower premium or less exciting on the paper customer segments. That's what we see working quite well across Europe. And I think that there is a cultural challenge behind this, is that, again, if you are distributing new product or targeting new segments, then you are not competing directly with business line internally, which means that there is one challenge that is avoided in terms of change. Now, just a few figures about what's the market or what might be the market, because we usually hear that insurance doesn't work online. So here it's a map from Roland Berger. And interestingly, as you can see, insurance is already distributed online, though percentage might happen or seem very low. You can see that in the Netherlands, it's like in the UK, quite advanced already, but let's say other countries seems to be lagging behind. But anyway, even with small percentage, just as a reminder, the European insurance market is a 1,300 billion euros premium market, so that's huge. So even if you take 10% of that, that's a huge market, 100+ billion euros opportunity. So again, if you have a look at the percentage, you can consider that it's nothing. If you consider the euros or the billion euros, it's exciting. And as an investor, it's enough to build huge companies. So that's the first KPI. The second one, which you have seen yourself, is the evolution of e-commerce. So here you can see the split and the share of e-commerce against all the retail market in the UK, in US. Obviously, due to the crisis, it surged recently. But long story short, it's now 20–30%. So if you remember well, on the previous slide, I said that even 10% would be a huge market enough. The truth is that maybe embedded insurance, open insurance, and more generally insurance distributed online might be one day closer to the e-commerce share out of the retail market, which could be around 20–30%, maybe more. So that's start to be significant. And I think that insurance company cannot consider it as a small opportunity. And maybe a few words about the challenges, because there still remain challenges, especially for insurance company themselves. I think one of them is to be able to consider white label. Again, I'm not saying that at the end of the day, the brands will disappear. I'm just saying, taking an example from BlaBlaCar, which is a car sharing service in France, they are distributing an insurance product, distributed and built with AXA. The truth is that the product name is BlaBlaSure. And as you can see on this web page, 3 times BlaBlaSure, 1 time AXA. So again, insurance company, if they want to really make it happen in terms of open insurance and embedded insurance, they might consider kind of disappearing. And by the way, embedded insurance means what it means. So I think that this is the first cultural challenge for insurance companies. And the truth, based on our discussion across Europe, is that the most advanced insurance companies are the ones that have accepted to time have their brand not displayed on their partner websites. And the last point, or one of the last points that I think is very important, and back to the regulation question, is the level of data. So if you take insurance company, they have what I consider small data, small amount of data, and mainly declarative data or contractual data, which doesn't help understand who the customer are, how they behave, what's their risk level, and so on. If you take banks, they have way more data. They have the transactional data. Obviously, they don't know what you purchase, but they know where you purchase. Long story short, they know quite well who you are, how you behave, and so on, and can spot life moments. I assume that this is because they have so insightful data about their customer that they were obliged by the regulation to open this data to third parties. And finally, you have the platforms. Here I put Google, Amazon, Facebook, but obviously I could put any vertical platform that has customers around one topic, driving school, health devices, home renting, and so on. And on their side, they have everything. They know everything about you. So if you are looking for data, they are on the platforms. So I think that here there is a challenge around whether there is a need for a regulation here to oblige insurance company to open their data if you consider that actually they don't have so insightful data about their customers. And the last point, maybe to open the discussion, I talked a lot about distribution because I think that embedded insurance is all about distribution, but more generally what we see around open insurance, building ecosystem, it has an impact upper on the value chain, price, product, underwriting, especially around new risks. So how to work with players that have insightful data on new risks that are surging. And on the lower part of the value chain on claim. So here it's much more leveraging technologies or building ecosystem or services where sharing data between players in that ecosystem might be insightful for everybody. Yep. Thanks again, and looking forward to the discussion in a few seconds.
Thank you very much, Florian. I think it's a really useful oversight that you just gave. Definitely, yeah, gives a very interesting perspective, I think, on how much is already going on. what I'm especially interested in already, maybe to spark people's imagination a bit as well, is that, okay, so you've got a couple of sides here. So you got basically young startups that could actually try to figure out where the opportunity here is. So I may be curious if you could sort of hint a little bit on where you see that the opportunity is for newcomers into the industry, as well as perhaps give the perspective on how do you see insurers respond. So, because I think that's also one of the things we're talking about here today is how can you actually adapt to this changing landscape? What do you need to do? I mean, should we all be should they all become a limited partner in a VC fund like yours? You probably wouldn't say no to that, but let's say there's probably different ways, different things that they could do. So maybe you can give a little hint there, and maybe we'll talk about that later on.
So I think that the first question for insurance company is, are you able to answer any ask and any request from the market to embed insurance tomorrow morning? Let's consider one platform that come to you and say, okay, can I plug your product, car insurance, home insurance, health insurance, to distribute it online? Is that feasible? If not, and that's the case of 99% of insurance company across Europe, the answer is first, build a team around API or work with external player, which I think accelerate the pace. So obviously investing in a fund accelerate the visibility you can have on the market, but it's much more, I think, leveraging technologies available on the market to make it happen very quickly and to be able to plug to this kind of ecosystem. I think that the challenge for insurance company is to be part of the next insurance generation that will be more connected and where the split between real life and online distribution will be more balanced than it used to be. So first challenge, be ready, technology speaking.
Yeah, right. Thanks. And we'll that's definitely a theme that we'll touch upon further on today. Thanks, Florian, for now. I think really useful to kick it off. And then we're moving to Ruud. Ruud van Hanswijk, who's looking after insurance for the Volksbank. Ruud, can we get you online? Yes, there you are. Thanks, Ruud. So very curious to get your perspective on how you, from a banking perspective, are looking at embedding insurance into your product flow and to serve your customers. So I think you're still on mute.
You can hear me now?
Yes, yeah, there you are.
Okay. And now I'm going to show my presentation.
Yeah, super. Thank you. Thank you.
Yeah.
Take it away.
Hello, my name is Ruud van Hanswijk. I work at the Volksbank as marketing insurance manager. And I want to talk to you about how the Volksbank is implementing embedded insurance. But first, briefly, some information about the Volksbank. The Volksbank is the fourth big bank in Holland after ING, ABN AMRO, and Rabo. And we have 4 financial service providers with their own profile. And the Volksbank is a driving force behind ASN Bank, BLG, Regiobank, and SNS, and that's the most known bank we have, with their own purpose. So SNS is purpose is financial resilience for everyone. ASN Bank is our sustainable brand. Regiobank is for quality life in local community, and BLG Wonen is home ownership for everyone. At the Volksbank, we are already selling insurances with SNS, but the other brands we are not selling yet insurances, so it's a great opportunity to expand. And for us, it's really relevant to be present where the customer is. And in our case, that's in the app. For instance, we have 200,000 views a day in the SNS app only. So this is a great opportunity to embed insurance in that. And what's extra nice for us that when we have embedded them in our app, the customer can change his insurance itself, and he doesn't have to log in a difficult insurance app where he maybe not know the inlog codes anymore. So that's a big opportunity for us. And otherwise, we want to be present where the customer is in their life events. So buying a house or having a child. We want to be present, and we use our data. As Florian mentioned, we have a lot of data. And if we can use it, we want to be relevant with the insurances and embedded in that process. But before we can do that, it's really important to know what the customer wants. So with really extensive customer research, we asked our customers what kinds of insurance they want. And as I mentioned, because of the other purpose, all the purposes of the specific brands, customers want different with each brand. So SNS is for financial resilience. So the customer wants a fully covered insurance. But if we look at ASN, the customer want more sustainability, sustainable recovery, or solar panels inclusive in the coverage when we look at home insurances. So when that's clear for us, then we make a proposition that fits with that. And we make also look at which brand is the most suitable to start with. So we started with SNS. They are already using insurances, and we're now looking at ASN Bank because sustainability is really hot. If we can also make a proposition for that customers. So we have the brands. We know what the customer wants, but now it's really important to make an ecosystem that makes it possible for us to implement insurance really easy. And that's for us the way to go is as little as possible business rules in the front end. And we make it possible by using the mid office from Roundcube, CCF, the insurance tech partner, so that we can, the logic the insurance company asks from us, it will be translated by the mid office, so we can show it in the front office. And because we have predefined fields, it's for us really easy to make different front offices, especially for each brand. So if you look at the picture on the left, you see an image how it could be look like by SNS, and on the right side it looks the same but a different look and feel, and that's the look and feel for ASN. But we want the data we already have with the customer. We want also the data of the insurance. So we have a local back office in which we administrate our policies, so we can bind up with banking data, so we can be more relevant for the customers. So we have our brands, we know what the customer wants, we have our ecosystem, and then it's really important to find the suitable insurance company. For SNS, we are working together with NN, and for ASN, soon to become the sustainable insurance. And we do that with ASR, and later this year we will also be present with that brand. And then we are looking if we maybe can also add insurances with our other brands like Regiobank and PLG Wonen. When we are, of course, there are some challenges. We start with SNS, and there's always a challenge by as less business rules possible against the customer journey. we figured out that in the customer journeys, you want to be relevant and you want to interact with your customer. So if a customer has a car who is too expensive, you want to immediately let the customer know that it's not possible to insure the car. And that's why we had to build more logic in our front office than first we were expected to do. So that's that's more technology. So that's more complicated for us. And we started this quite difficult ecosystem with 3-4 parties, and you are sitting together. It's more convenient than everybody is sitting at home looking at the cameras as I'm doing now. So that was, COVID was also a bit difficult for implementing the new ecosystem. What we are managing, and in a few weeks we will implement it for SNS, and soon to come, as I mentioned, for ASN. To wrap up, we have 4 branches. We are relevant with products customer wants. We are at the place the customer is. We are find the insurance company, and we make our own ecosystem. So that's really nice for us. And at last, I want to give some extra thing to say. We want to be relevant with data. We want to be relevant in our app, but you don't always have to be relevant with extensive customer data. And for instance, the signal weather we send to our customers, it was not based on data or anything. We just send it to all the customers who have a home insurance. And we asked our customer if we sent an email and we get a 9.5. So that was really good a figure we get. So that was without data, but we were relevant. So that's nice to know. And that was the end of my presentation. So thank you for your time. And let's talk to each other later.
Ruud, very, very nice presentation. I think it's we get to understand your perspective here. And as well, I think actually to pick up on the last point that you were just making, I think which is really relevant because very often you see that we kind of get hung up on acquiring data first before we even know what we want to use it for, while we might actually direct the same energy towards actually understanding what might be relevant for our customer, and we might even be able to solve it without having the data. So I think that's a really nice example as well that we definitely need to keep an eye out for, because just caring for your customers might actually be more important than knowing everything about your customer.
Yeah.
So good example. So one thing that I was curious about as well with your presentation is at least we got a question on whether you think that the Regiobank label will also be a channel where you will be selling insurance. That's a question from the audience. And another one is that I would say is how do you currently structure the relationship with the insurance side, basically? So is there how do you interact with the insurance party, and are you co-creating these opportunities, or are you pretty much independent? That's at least one question that I had on this.
Yeah. With NN, it's more co-creation. It's all the insurance are SNS branded and specially made for SNS. With the ASN Bank solution, that's more broker relation. So that's the product they have, and we are selling it to our customers. So that's the difference between NN and ASR, who also already has a sustainable insurance. So that's a bit the difference. And the other question about Regiobank, it's not logical that we are making our own Regiobank insurance, because they're already selling insurance, and not only from Regiobank but other insurance companies as well. But maybe we can help them with interacting with the customers more, but that's later to come.
Yeah. Okay. And then maybe just one brief last question is from Harman about whether you see opportunity in PSD2 to use more signals or connect them to actually create, let's say, use bank data to create better signals for customers.
Yes, it's a great opportunity, but yeah, we have the legislation that makes it sometimes difficult to do, and the Volksbank is really doesn't want to be the first mover at customer data using for insurance. That's a bit difficult. I see opportunities, but yeah, legislation makes it a bit difficult.
Okay. Well, it will be interesting to explore that further, perhaps later on. Thanks, Ruud, for now. Thanks for sharing your insights, and I'd love to hear more later on during the discussion. But now we're going to move to Michael Mackay from Nextbiz. Michael, can we get you online?
Let me share the screen.
Yes, good to see you there. Yeah, really curious to learn more from your side, especially about the connectivity that's required here to make this all work, right? So if you have the idea on strategic perspective, and you have the idea to work with you sort of understand what you want to make connected. How do you work with that connectivity? What's the challenge there, and how do you solve it? So really looking forward to your presentation here, Michael.
Yes, thank you, Don. For those of you who don't know me, I've been working in insurance since 1995 as a former broker and as an MGA. Always had great interest in the possibilities of IT, and in my new venture, I'm happily pursuing those possibilities. As for the agenda for the short presentation, embedded insurance, great opportunity. But what's new? I will just have some similarities with the old way of selling insurance. I will show you some of our use cases, and I will help you with 7 key requirements that we have found out that are very important to be successful in this market. For those of you who haven't seen this study of Simon Torrance, his name in the bottom, and we will share these slides in his name. It's a wonderful article where he focuses on a 3 trillion market opportunity for embedded insurance. Also in the line below, that could also help close the protection gap. And that's something that we see in embedded insurance, that where we are used in insurance to have like a push to sell insurance, what we see in the embedded insurance market is much more a pull, where platforms and market parties are looking for insurance possibilities as a logical extension on their proposition that they already offer. And if you look back, actually selling insurance by other parties, or at least focusing their customers, is a way that customers are used to. Selling a second-hand car or a new car used to be a logical moment for the car salesman to offer an insurance. If you were booking a travel in a travel agency, logically travel insurance would be discussed. If you were selling a home or a new house, home insurance would be offered. If you were taking out a mortgage, they would discuss with you the risk of life insurance and the possibilities to take that on. So we have a very large history of selling insurance through other parties, because they are there exactly at the moment when the risk and the risk appetite of the customer changes. So this opportunity that we see here, and this one goes to 2030, seems extremely logical. What is changing is the way that customers are doing business, changing from offline to online, but also omni-channel. And what you see is that as an insurance industry, we have difficulties in adapting these changing consumer patterns and way they want to do business. And that is actually something that we need to address, because since this market is changing to a pull market, you will see that the platforms and the front ends will look for insurance, and the one that serves them first will get the business. The one that's suited to serve them first will get the business. And the ones that don't have their act together, so to say, will simply miss out. Some of our use cases, embedded insurance is quite new, but with our company, we have been doing that since 2003. This was a business case, Triple IP, an international platform selling short travel insurance right where people book their flight tickets. Operational still today in 28 countries. We had customers like Lufthansa, China Eastern Airways, and linking these local airline companies and local customers with local insurance companies in a great functioning platform where the travel insurance was offered right at the moment when people were making their booking. Up until 100,000 transactions per month, pre-COVID, so to say, whole travel insurance has a lot of difficulties, of course, at this moment, but the platform and the case was there to prove it. The second one use case that I would like to mention here, because it's a little bit more traditional and a little bit more online, offline together, is DRT Group in the Netherlands, working under the name Dayreizen and Vakantie-expert. Vakantie-expert online, Dayreizen traditional way. Up until 2017, these booking agents were literally having two sets of computers. They had one set of computer on the right where they were using their booking program to actually book the travel. And then they would shift to a second computer where they would do the travel insurance. What we did is integrating the travel insurance proposal right into their booking flow, making it much more easier for the booking agent to actually discuss the travel and sell the travel to the customer using the same data, the same time. These two opportunities, Triple IP, DRT Group, are very much selling traditional products that were sold before as well. Another one that was, for me, really new was Amsterdam Dance Event, Sensation-wide, where we were selling ticket cancellation policies to huge volumes. And you can imagine in the traditional system with brokers, even with MGAs or insurers, selling insurance for a premium of only €2.50 is almost impossible. You don't get a business case out of that if you work the old-fashioned way. In this way, it was a simply tick the box when you booked your ticket for the dance event. It was simply tick a box to get this cancellation ticket ready. And this was new type of business that was not there before. And this is one of the very challenging ways in the embedded insurance possibilities that we see, that actually insurance opportunities that are not existing today will start to exist in the future, simply made possible by technology. In this special case, we used to see not a regular flow of moments that these insurances were actually being sold, but what you would see is that the event would open up, say 10 o'clock in the morning, and within 30 minutes, you had about 40,000 transactions. And after 30 minutes, the event was sold out and the opportunity went down again. So huge volume in short time. This picture, also from the same study of Simon Torres, shows a lot of words. I really recommend for people to look this up on the internet. It's on LinkedIn, you can download it there. And it has a plate here, or a schedule that we all know: insurers, MGAs, for Dutch volmachten, the neo-insurers and the specialist insurtech, and the old type of way through brokers, going direct, or going in the new ways. This line here basically says what happens in time: traditional, direct, wholesale, embedded, the way we are going in time. This is the way data is moving. And with our company Nextbiz, we are here in this spot, in the black spot, new intermediation. We offer developer platform complete with an API marketplace. And we have various customers like MGAs and like the full stack insurers. And I'm sure in the future, reinsurers as well. Now, how to tap into this opportunity? Because, like mentioned by the two previous speakers, the market is demanding this. The market is questioning us, come up with a solution. I have the opportunity. I want to add this. How can I do this? What I have put in line here for you is 7 different requirements to keep in mind when you are going to decide to either build this technology, build your own platform, or acquiring a platform. The one major thing that we see is the difference in pace between the front end and back end. In the back end, normally everything is about having a consistent operation. So everything that is changed takes a long time. Although things are speeding up, we all are familiar, I think, with long development paths, thinking in quarters, and most of the time not the quarter of this year, but the quarter of next year. Opposed to the front end, your customers want their solution now, and once it is installed, they want it to be adaptable as well. That's a difficult match between the two, and you would need something in the middle to actually align these two different needs for speed. The second thing that's important, and I just mentioned that with the event of the ticket cancellation, you want elastic scaling and pricing. You don't want to have a set all the time up, a technological set all the time up, just for this 30 minutes of 40,000 transactions that you have every now and then. You want to be able to go up in your capacity, but you also want to be able to go down to avoid unnecessary costs. The third thing is integrated data transformation capabilities. What I mean by that? Inside the traditional insurance, we have a lot of regulation, but also we have a lot of cooperation between the parties. For instance, in the Netherlands, we have CIVI, which is a special institute that looks for the same kind of data standardization. And where we can, within our market, within our insurance market, we can enforce our own data in the chain. It's quite difficult to do so outside of our markets because different parties, different platforms, they use their own data sets. So somewhere, if you, for instance, offer an API, it's very difficult to demand from the other party, I need my data to be in this fixed format. It's much better there to take full ownership of the data problem, allow all the other parties to hand you over the data in the format they want, and make sure that you are in charge of transforming this data into the proper way that you need it. The fourth one is automation. And with the premium of €2.50, it speaks for itself. Every natural person, flesh and blood, that needs to look at an exception or that needs to make a step is draining money. You want everything to be SDP. You want everything to be automated as much as possible. And a lot is possible. The next one, you need someone to take ownership of the complete channel. Of course, it is all different kind of parties that need to work together, but you need an orchestration over the complete flow. You cannot just sit there at your end watching to see things come in or not, and not being able to answer where possible difficulties are in the chain. So you would need like a complete orchestration where you can monitor all the steps, have management information on all the steps in order to adapt these processes to make sure that conversion, customer satisfaction are to the levels where you minimum want them. The next one is configure to order. What you don't want is very expensive change processes. As Ruud just mentioned, he is looking at a way where he needs to align constantly 4 different parties. And that costs a lot of money. These processes to actually look at the way a proposition is built, the way a proposition should be changed, that process needs to be as simple and as cheap as possible. And in that process, what you want is software that is easy adaptable. You want, like in this case, for example, predefined products, which you can just easily configure for the specific needs of the customer that you have. And the last one, what you want here is you want an entrepreneurial mindset. You don't want risk avoidance. Of course, you don't want to take the risks that are unnecessary. You want to really build a business case, but you have to have the entrepreneurial mindset. And it's a little bit like Florian said in the innovation difficulties that are there within existing companies. You need to have someone there that is looking at this opportunity and that is confident of doing whatever it needs to be successful and to go and not to leave it. Within big companies, that's sometimes an issue. You don't get rewarded as much for a successful new business case. You do get punished sometimes for the mistakes and the failures that are necessary to happen every now and then. So this part is important to be successful, and you want the same entrepreneurial mindset with your partners as well, because it is new territory. You are trying to define and exploring new ways, and definitely you want a lot of persistence and perseverance to make it happen and to be successful. Wrapping up, the 7 things to keep in mind. There is difference in pace between back-end and front-end. You want elastic scaling and pricing. You want the enhanced cross-channel orchestration, and you want to take your responsibility there. Automation, 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 everything SDP. You want to take responsibility for data transformation and make that easy for your partners. You want configure to order versus assemble to order, and you need entrepreneurship. That was my part for now. Thank you very much.
Thank you very much, Michael. Nice overview of some of the interesting cases. I think some very interesting cases, as well as some practical handholds on how to actually get going. Let me see. I saw a question already. If I can bring that forward. Yes. Now, what would you recommend for embedded insurance? Customer opt-in or customer opt-out? Is a question by Mark.
Yeah, it's a great question. Of course, you would like to have customer opt-out, but there's quite some regulation there where in insurance customers would need the chance to buy the original product without the insurance. And you have a gray area in guarantees, extended guarantees, where it's very close to the product. But of course, conversion rates go up if the customer actually has to click and opt out. But I'm afraid we would have to do, at least in the Netherlands, with opting in. What you can do, of course, and what some of the front ends do, the moment the customer doesn't opt in, you get a second pop-up. Are you sure you don't want to take out this cancellation form? That's not just a marketing nuisance. It's also based on taking care of your customer and making sure that he understands that if he doesn't take out the insurance and something happens, that the coverage isn't there.
Yeah.
I hope that answers the question.
Yeah, I think it remains indeed always a question indeed on whether having the product is really a benefit for the customer, or whether it's something that's optional and therefore might actually just be a cost, right? So I mean, there's also still something like over-insurance that we see a lot as well in the European market. So from that perspective, you could argue different direction, but Michael seems to be happy with the answer. I'm glad. Niels also asked a question about why there is a pace and difference between front end and back end. Can you elaborate a little bit on that?
Well, the back end has to do with regulations, has to do with the way they do their financial reporting, also like impact analysis, really changing things in the back end. Really is a more difficult product and or system. And what we see is that sometimes the backend systems just have legacy. The Dutch MGA market, 70% of the market is using the administration of AMVA, which is still using a COBOL database. And the COBOL database is running a backup from midnight till, let's say, 3, 4, 5 in the morning. So most of these companies actually have like a shadow database, SQL, that they can use to run much more smoother. On the other hand, the I have not yet found many embedded business cases that from the start up were for everybody an open eye, this is going to work. It's like a rough idea, this is what we want to do, and then you start adjusting as you go based on customer experience, conversion rate, and you tend to find out what works. And that means that you need to, it doesn't necessarily have to be agile, it can be waterfall as well, but
yep.
You have quicker adaptation than quicker adaptation pace necessary just to learn and to see if other things work better.
Yeah, true. So I also would like to ask Florian and Ruud again to join in any case for the discussion. But Michael, one other question maybe to follow up on this. So do you feel there's a case for a complete overhaul of the insurance stack basically before they would actually be really ready to be embedded and to play along in the future of insurance basically?
And you mean complete overhaul of the existing insurance market?
No, so especially of the technology stack, right? So would they actually need to get rid of the old core systems before they would be eligible to actually really play along in the future market?
Well, it's going to be an interesting question to see in the coming years. As Florian said, for these new opportunities, definitely you want new technology. You don't want the old technology. For the new opportunities to fully take advantage of them. So you will get new companies that don't have the legacy and that are able from day one to start with this new technology. So this is the one end. Then you have the second end, the traditional insurers. They cannot easily overhaul their technology. It's simply too difficult for most of them to do that. So what they do is they try to work with add-ons. And the question is if with these add-ons, they are capable to compete in this market. What is sure for me, this opportunity that Simon pointed out, the opportunity is there. So the one that is going to be best suited to offer the optimal service to these companies, that's the one that's going to win. And the local insurers are for these opportunities not necessary. You can bypass them and go directly to reinsurers to actually take advantage of this case, especially if you are, like we saw in the meeting last week, especially if you go cross-border, maybe reinsurers are a better option to get your risk covered.
That's an interesting stance, right? So would indeed be the risk-taking be done by the reinsurers, and then basically the distribution be done by non-insurance parties, or at least new parties. Who is going to bridge that? And that doesn't necessarily need to be an insurance company, I think.
Well, it doesn't, but we have one interesting business case in the Netherlands where Ellipse, daughter of Swiss Re, bypassed the local insurance companies and go directly to the MGAs to make their offering in business disability insurance available there. And they went from 0 to 100 million premium within 5 years in a market that is still determined by 3-year to 5-year contracts. So that was quite impressive. So in legislation, maybe you want the MGA, maybe you want to have like a broker or a broker role that is technically very well adapted. But it's interesting. It's interesting to see what will happen. It's difficult to predict too.
Yeah, for sure. So what do you think, Florian? How do you see that this opportunity is evolving at the moment?
Yes, so definitely I think that the push is coming from the market first. Second, it's accelerating because we see more and more platforms that are requesting or at least that are interested in embedding insurance product into their customer and sales journey. And I think that there is more and more pressure on insurance companies themselves to answer this market opportunity. And back to your question around the legacy system, I think that it's related as well to the opportunity I mentioned to develop new customer segments or new products, because then you can almost start from scratch with the new IT infrastructure, API, very light, very, let's say, market practice in terms of modernity, and you don't necessarily need to rely on the core IT system that you have anyway, which is serving millions of customers that insurance companies have already. Because again, and back to the exponential curve that was shared earlier in our discussions, it will take time, and for a long time, figures will remain low. So there is no need to have a huge, heavy, inflexible IT structure to serve a few thousand customers. And even the figures that were shared by Michael, they are impressive. 100 million premium in 5 years. That's huge for a startup, obviously compared to billion euros for insurance and reinsurance company. It's, I would not say nothing, but it's, let's say, limited. So again, even to serve and to address this opportunity, you don't necessarily need to rely on the existing system. And I would say the insurance player that have been trying to rely on their existing system to address this new opportunity usually fail because it doesn't work, it's too heavy, and it's not the right match because there is a challenge to plug to these players, platform, e-commerce that have a modern IT system, and then there is a challenge to connect the dots.
Yeah, I think it is interesting to relate this also to the graph that Onno was showing about how we basically always sort of underestimate the growth at the beginning, and let's say we overestimate the beginning and we underestimate how it goes at the end. Yeah. But one thing I always think when I see that is like because it might encourage people to be later with their response. But I think you always have to know if you want to be ready for when the exponential growth does kick in. You still need to start now, right? So it's actually not a way you cannot defer your action because it will only be bigger later. So especially when people say, you know, but this is still very small compared to my market, and these are all just, you know, tiny little things. It's all cute, but if it actually grows exponentially, you have to start responding right now because you will be too late when they actually come at par at your size.
Yeah, Don, if I may add to that, even if the volume is small, if these newcomers succeed in taking away your most profitable customers simply because you have a mismatch there in your premium compared to the actual risk that these customers have, then maybe the turnover downside is not so big, but in profit it can be a multiple from that. Yeah. And this is where we haven't really went in depth on the way that more information, more data for these insurtechs helps them actually to make a better offering. And yeah. That of course has other ethical issues, the way the insurance market is responding to that, but it's definitely a threat. If they take away your most profitable customers, they're going to hurt you.
Yeah,
and it's also go ahead, Florian.
And I would add that there is a seat to be taken, meaning that if you don't take it, one of your competitor will take it anyway. Because again, the example that we shared earlier does exist right now. They are live. So the challenge is, again, somebody on the market will deliver the policy anyway. So it's better when it's yourself. If it's not you, then it will be a competitor. That's the truth.
Yeah, Ruud, can we like to get your take on this as well? Because of course the banking scene is also used to seeing at least the biggest margins being eaten away the first. So how do you look at this?
Yeah, no, I look at it. We have a huge advantage with our customers using the app for using the bank accounts, but the big techs are also coming, and Apple with also which using the bank card. So it's a small step also for the big tech to step in that. So also for us, it's now the opportunity to embed it in our customer journey, and otherwise it's maybe too late because big tech also gets into it.
And so do you see a synergy as well there by actually looking at the needs of your customer from not just a banking perspective, but also the insurance perspective? I mean, does it help you actually to better get a grip on, you know, what they actually need in life?
Yeah, because we get extra data from the customer than we now have for the banking. For instance, I always have the travel insurance. You also have to ask how old are the children because of the coverage. Now that's extra information we don't always have. Now, if we have that information, we can sell child's savings plans to the children. So that's a simple way we can adjust it.
Yeah. If I can add two things, Don. In another possibility, this is just as if there is one pie, and the newcomers are going to take something from the pie of the existing insurance companies. But in fact, what you see in the Netherlands is that standardization for a lot of consumer products is reducing the choice. So the newcomers as well have a chance to offer new insurance products to the market, needs that are currently not met. The second part, in a lot of processes, for instance, mortgage process in the Netherlands, you see that the fact that insurance is not made easy causes disability insurance and life insurance to be under-advised. So there's a large protection gap there of people taking out mortgages and in the end not having the proper insurance that meets their needs. And also in this part, these newcomers will help just to solve current gaps in the way insurances are being distributed in the Netherlands.
Yeah, for sure. Thanks. I think there's definitely a lot to be done there. It's a great opportunity, and I'd like to dive in a little bit there as well as on how that opportunity is taking shape and actually how to act on it in a second. But first, I'd like the audience to actually go to a poll. So if you go to under the button session, go to poll, you will see a question there with 4 answers you can pick from. I'd like to ask you to fill that out because it could help us actually give the decision to shape the discussion a bit. We've got in total 3 questions for you with multiple choice answers. So please feel free to answer it. And then what we'll try to do is wrap up the discussion in about 15 minutes. So you'll still have some time as well to connect to each other because actually within this platform, you can click on each other's name to connect directly, or you can actually go to the networking button on the left to get connected to a random other attendee to have a conversation and meet each other. Almost like you would be at the bar, accidentally standing beside each other and having a chat. I'm afraid we're not in that scenario just yet, but we hope to make the best of the current situation. Let's see if we can get the answers of the poll up. Let me see. Well, in any case, first we'll continue with another question that was open, or maybe we'll just ask here. So, what's your? This is more of like a general part. What's the most appealing here from your perspective, Ruud, on these answers of the poll? So, is it the next big thing? Very logical consequence. Great opportunity for other distribution. Right time, right place. Nice for a specific segment, but not for everyone, or is quite a threat to potentially to existing business. What do you think, Ruud? What's the most appealing? What's where you're?
Sorry,
more...
I cannot see the questions, the poll. So yeah, I see it as a great opportunity, but that's. From a bank perspective, and otherwise, yeah, you can be relevant at the place the customer is. So, yeah, I see a lot of potential in it. But you have to combine it with data and the right proposition.
Yeah.
So for instance, the example of Michael with Sensation White. yeah, it was really simple insurance for 250. That's not really common in Holland. So yeah, the insurance company has to adjust to that and make a simple risk product. So yeah, the insurance company has to adapt to that.
Yeah. No, indeed. So that's I think the nice part is that we really get these new unique opportunities that would not be available if you wait for people to come to your agent's office basically to buy an insurance. And I think that's a really nice one, because there are a lot of occasions where indeed insurance might be applicable, but in the process normally just the insurance flavor would not be available. So that's definitely a very nice one. To take it maybe to Florian while we're trying to fix the polls to actually show you the answers.
Yeah.
Florian, about the opportunity here, this also was a question by Mark a bit earlier on, is yeah, so what kind of products do you think are eligible for this? Do you think that there's a specific scope that's relevant, or do you see that that's actually in the end could be a really wide application?
Yeah, that's what I wanted to add, is that again, I think that we are not talking about moving every product, every customer, every distribution online. That's not the topic. I think that what we are discussing is the opportunity to digitize, let's say, like e-commerce, maybe 30% of distribution. So let's start from here. Again, the idea is not to distribute everything online. That's the first point. The second point is that obviously several products are more relevant to be distributed online. I think about those that are mandatory and those that are, let's say, aligned from one player to another one. Let's take health insurance, car insurance, home insurance. They are very standardized. So here, when you have almost the same product from one player to another one, then there is not a lot of things to be fine-tuned, and obviously distributing online might be relevant. And then in terms of customer, it might change as well. Obviously, people that are not tech-savvy have nothing to do online, whereas for, let's say, millennials and young customers, they need to go online because they will never go to a brick-and-mortar shops. So again, the matter is how you can process every product, every customer channel that could be standardized and that could be, let's say, more, or that could generate more margin by going online. I think that this is the opportunity. So usually, and that's the challenge, and I think that there is somebody in the chat that raised that point, saying, okay, if you'd like to have this product for everybody, again, that's the usual, let's say, a challenge that we get when we say that we are very pushy on embedded insurance. And the answer, again, is that if you take a very tiny part of the market, very complex product, obviously this one will not be distributed online. And that's not the matter. Again, it's much more product that are standardized for mass market. And here technology is highly relevant because you can deliver more margin. So huge opportunity. But again, I'm not targeting more than 30% of the market to be digitized, at least in the short term. And again, I think that the proxy and the target to have in mind is the ratio between e-commerce and retail.
Yeah. No, I think that's definitely the case. And so where do you see also new companies coming up to see this, right? So if a startup would basically be interested in this space and sort of find their way, how would they find their spot here? Because I think you still have the large players like the reinsurers or insurance companies or the big e-commerce or retail platforms or the big tech firms. You see that these dominant players remain very important in the value chain. So how do you actually, if with a smaller company, how do you jump in here and where is the opportunity?
I think it's in the tech layer enabling this opportunity because again, platforms, they are interested in embedding insurance to increase the relationship that they have with their customer and gain margin on their customer base. On the other hand, insurance companies are sometimes interested to distribute online because again, it could help them distribute new product, address new customer segment, and be more profitable on these lines. So they have an aligned interest. And in the middle, there is a high requirement, which is all the open insurance / embedded insurtech startup that we see on the market, which are enabling plugging on one side customers and on the other side insurance player. Because again, if you take insurance company themselves, if they try to do it themselves, especially through the IT team, the truth is that the roadmap for an IT team is years, not weeks. Whereas the challenge and the opportunity in terms of embedding insurance in platform is a matter of weeks. When platforms are coming to the market requesting insurance product, they want an answer fast to be live in the next weeks, in the next months, not in 3 years from now. So that's two time frames that are very different from each other. Hence, I think the opportunity in the tech part. And by the way, I never forget that in insurtech, there is the word tech. So long story short, that's where we see the opportunity. Tech players enabling the opportunity, because the platform don't want to put their hands too deep into the insurance side, and insurers are lagging behind in terms of technology.
Yeah. All right. Yeah. I was just wanted to check, Ruud, how do you see that? Because I think, do you also rely on third-party technology players, and are you, for example, also scanning the market for tech capabilities, for example, that you would like to work with to enhance connectivity or think about different kind of UX or presence?
We scanned the market when we are creating our ecosystem, and that's why we came to CCS for Roundcube, and that's the party who is making it possible. And with Marketplace, who you can it's the working together with Roundcube. So if we find a partner, it's we will talk to CCS and they can implement it in Roundcube, so it can work together with our front office. So for embedded insurance, that's the way we want to work, and we don't want to put a third party on our front office. So as well as the insurance company, as well as a tech partner, adjusted in Roundcube from CCS with the Marketplace.
Okay. Yeah, sounds like a reasonable thing. So I think that's then a really big enabler. That's sort of the core through which you basically try to connect everything.
Yeah. Because,
do you see also opportunity to work with other parties around that?
For if we're looking at the insurance as a product, no, but we can add services or something, and maybe we can work together with that. But the technology of Roundcube, that's our enabler for the front office. And that's why because we have a lot of difficulties in our company. The IT resources are really scale, and the mortgages and the banking products are more important than the insurances. So that's why we're working together with Roundcube for us to make it possible.
Clear. Thanks, Michael. How do you see this? Do you also see indeed tech being the big enabler here to facilitate this? And where do you see the opportunities?
Well, definitely the enabler. I must say the opportunities for the market front end is getting to find a party that can help address your needs, and that can sometimes be quite a burden to find somebody to help you. As for the insurance companies, if you look at my list of the 7 items that you would need to keep in mind addressing this market opportunity, these 7 items actually are not that much different from what you would want to have inside your company, if your company is big enough, to make sure that your IT works. Because also inside your company, you have agility in product development, you have marketing that would really like to do things fast, and that is always struggling with IT. That takes all the time. So basically, a lot of these requirements you could use to really put your future requirements for your own IT platform in place, and thereby actually in company get the experience, be ready for the outside world when it comes there. Because there's a lot of homework to do in products, in the way you organize inside before you are ready to go out. If you are out, it's visible, customers are using it, and there is risk for your reputation because you are in the market. Florian already mentioned in some countries you have cross-channel, and not every channel is happy with new channels arriving with the same brand name. So this is where I would start anyway. That would be like low-hanging fruit, making sure that you are ready for this because your own organization probably benefit enormously adapting this kind of work.
Yeah. Thanks, Michael. So we got another poll question up here for the audience to answer. So if you go to session polls, there you'll find question number 2, which is how far are you in deciding what to do with embedded insurance? Our innovation team has it on the radar. We're actively experimenting and doing, adapting our infrastructure, ready at full speed, or have looked at it and decided not to work with it. As expected, the last category didn't get a lot of votes in this group. So I'll still for the people that are there to join. We see now that there's actually quite some votes for being at full speed. So that's quite interesting to see that there's quite some confidence in the audience that they're already on the right way. I'm not sure, Ruud, if you invited your team to join and vote here.
No.
So we're now up with 10 votes. So if you want to see the results, you could just, if you give an answer, you'll get the results immediately. But indeed, we got now 10 votes that say we're at full speed, followed by 3 votes for experimenting and doing, and it is on the radar early on. So I think that's quite exceptional that it's that people are relatively confident on being at full speed to work with embedded insurance. What do you think, Michael? Is that what you see more, that there's people are really well underway with this, or is it also a learning trajectory where we just really need to take some time before we're actually really at full speed?
Well, speed is a relative relative thing. So full speed is all obviously in experience, but a lot is happening. Not necessarily the opportunity is there. What we find with the parties that are not at full speed is they simply have too much already on their plate, and it can be consolidation, it can be the other market opportunities that are there that they give preference to over this one. But definitely there's a lot of companies working with that, and Ruud already gave a nice example of CCS Roundcube, which is a colleague of us in the same market. We definitely are doing the same. We have some people in the audience that are really front runners in this market. So yes, I'm not very surprised with the outcome of this poll.
Okay, good to hear. We actually already brought up the following one to actually keep things moving a bit. What are, in your view, the capabilities that need to be developed to embrace embedded insurance? I think, Michael, you already gave a really good head start for that with your 7 recommendations. I'm curious how the audience feels about that. So the answers are building effective partnerships with non-traditional players, digital transformation of the backend core processes, or opening up our infrastructure to allow API-driven plays, or ensuring regulatory compliance, data privacy versus the ease of customer experience, which the latter one is, of course, quite a challenging one and perhaps an interesting one to pick up on here as well. Maybe to start with you, Ruud, what's your how do you struggle in daily life with the privacy stance? How do you keep your customers safe and their data safe, and at the same time try to understand them well enough to be able to serve them better?
Yeah, that's a struggle. And when we are making a product with an insurance company, it's always the challenge from which data we can use and which data is not possible, and that's always nice conversations also with our legal department. What is possible in that? So yeah, that's the most important thing from if we talk about products. We talk to our legal department from what's possible, what's not possible, and then we are interacting on that.
All right, Florian, how do you see that market to market? So do you see also that there's basically a difference in the way that for example, cultures or legislators look at privacy across Europe, for example, and does it have an impact on the capabilities of companies?
Yeah, that's a great question, and I would say that it really depends on the level of, let's say, confidence in technology. So that's obviously different from one market to another one across Europe itself. I would say I remember a few figures around adoption of e-commerce across Europe. I was quite surprised that France and Italy were lagging behind. By the way, Netherlands was ahead of the wave with the UK as well. Germany was, let's say, in the middle. But that's quite interesting, and I think that it's correlated to the trust that you can have more generally in technology, and then around data privacy, because I think that everything around data is a matter of value for the final customer. Let's take the example of GDPR. I remember 2-3 years ago, insurance companies were saying, okay, that's a great opportunity for us to compete again against platform. The truth is that 2-3 years later, we are still sharing everything with Facebook, Google, and these guys, and we are still not sharing that much with insurance company. And if an insurance company comes to a customer tomorrow morning saying, okay, or asking to access any data, the first answer will be a question, what for? That's related to what you mentioned. So first, as an insurance company, as a company, whatever you are building, data are just a means. They are not an objective in themselves. And I think that the major challenge, again, is to explain the value proposition for the final customer. And if the final consumer consider that it's worth sharing the data, then he or she does it. So again, data privacy, I would say, is highly correlated first to the value proposition, and second to how comfortable you are with technology. I think that's what we see across.
No, I agree, and I definitely you do see that indeed that differs country to country, but indeed also industry to industry, because from that perspective, I think I always try to make the comparison there with, for example, applying for a job, right? So if you are applying for a job, you don't tell your future employer, just find everything about me on the internet and look at whether you want to meet me, yes or no. No, you actually give them a carefully crafted set of data to make a decision on that you really would like to have a hand on. And I think the same thing goes around with financial institutions that are actually making important decisions on behalf of customers, whether they have access to credit, whether they have access to insurance, or what kind of fee they have to pay for it. And because we are so aware of these decisions and that the data that we provide them actually makes a difference there, that's, I think, why we're more careful to share data. Because I don't think, not about whether we trust them in the end to have the data, but it's more about, I think, the consequences of having that data in their decision-making processes, right? So if I'm an entrepreneur, I want to ask for a credit, I want to shape the file that gives that they use to make the decision on. I don't want to make them basically Google everything that they can find on me to make the credit decision on, because I don't trust that perspective.
Yeah, that's interesting. It's interesting. And by the way, that's what we see in Vitality, for instance, around health insurance. They shared once that they had a claim rate which is 30% below the average of the market. It's just risk, let's say, attractiveness, meaning that obviously people that accept to share their health data are people that are, let's say, in a good health. So this is a risk selection, which is smart, by the way, for them. But I think it's related to what you mentioned.
Yeah, I think so too. How do you see that, Ruud? Do you see a similar question as well arising always when you talk about the privacy side of things? Do you see that your customers are very critical there?
Yes. For instance, if you want to buy insurance, we ask about the income, and always the question, oh, why you want to know that? That's the same point you made. So yes, we see that, and yeah, it's a nice example how the customers react to that. Because there's also always a possibility we don't give them the loan or we don't give them the mortgage, and then that's why they maybe they don't want to give this the kind of data to us.
And I think so that might actually, because I think this is very often confused, right? So the trust in the institution and the trust in the decision-making process, I think, are two separate things. Well, I really believe that if people say, like, if you don't make any credit decisions, I'm happy for you to have my data because I believe that you're regulated well and your processes are okay. So I think financial institutions are well trusted not to do anything bad with the data. I think that the difficulty is the fact that they, at the same time, within these institutions, they make some important decisions that can make or break some things in their life.
Okay. Okay. Now when you go to the bank and you bring your money to the bank because we are trusted with that, so they trust us with the money, and maybe in the future bring your data to the bank, and we entrust it with that, and that's more maybe some field for the banks to step in. The data bank. So
exactly, but then I think the decision-making process perhaps needs to be actually really, behind a Chinese wall, a real one, not the Japanese walls I usually see that are see-through. But so the real Chinese wall. So actually, so indeed, people can trust that not all data is being used for those kind of decision-making process, or at least we need to come up to a good communication around these processes.
Yeah, and then it's nice to know which data we have, and you can say, okay, you can use it for that, or you can use it for that. But we have to be more transparent about what data we can use, and then the customer will trust us also with the data. If we trust her with the money, why don't we trust her with the data?
Yeah, exactly. Yeah. Michael, what do you think about this? Do you see a big role there for the trust in financial institutions also with the data?
Well, I think data and trust would in itself make up for quite a nice meeting and webinar. But our point of view is that we just want the data that we need enough. So it's like privacy. We really look serious to not get any excess data. Just whatever we need for the process or the insurance or the claim that is necessary, and thereby preventing that there could even be a discussion or question that we in another way that it was meant to be. On the other hand, of course, with all the regulations and legal systems that we have in place in the Netherlands, if you don't ask certain data quite straightforward, for instance, claims in the past or a history of somebody who wants to take out an insurance, it's quite difficult to in case of a claim that you want to reject, difficult if you don't have that information. So it's a little bit on both ends, but I agree with you. You would just, what you need to know to get it done properly is what you need to ask from the customer. Apart from what the customer or the client offers you, of course, there's various different systems where you can get additional information. And very simple, for a car, you could get all the information about the car just by getting the driver's license. If you want to know anything about a building, all you need is the postal code and the house number. And we have, of course, FIS and Frisch in the Netherlands as systems that help us to prevent fraud by keeping premiums to the absolute minimum.
Yeah, no, I think that's really related as well. And indeed, I think the perspective that you just mentioned, I would always call it, let's say, the fact that having data actually becomes a liability, because it's really becoming a risk to have data that could be lost through security breaches or misinterpretation or wrong decision making. So indeed, that's definitely something to be really careful with. And even though I do expect that we still get a Gdpr 2.0 kind of variety to actually really make that regulation actually work in favor of the customer. I think for now, indeed, that's definitely a good perspective to share. I think we should be wrapping it up just to make sure we keep it somewhat within time. I would like to thank you very much for your contribution today. I think it was a really lively discussion, and I think we've touched upon the whole field of embedded insurance from startup opportunities to incumbent challenges, technology perspective, regulations, and privacy aspects. So I think it was really useful. Looking forward to do that again. Already to give you a bit of a heads up, on the 11th of March, we've got an insurtech meetup together with our colleagues from Belgium and Luxembourg. This should be a really interesting one. You can see that on the screen. And for now, I'd just like to say, Michael, any last words perhaps from your end?
Thank you. Wonderful opportunity to share this quite thrilling subject together with all of you. Thank you so much.
Yeah, thank you, Michael, for your contribution. I think really useful. Ruud, any last words from you?
Yeah, thank you. Also nice to be here. And looking forward to the next meetup from 11th of March.
All right, thanks. And Florian, thank you for joining us from Paris today.
Thanks a lot. And by the way, if in the audience there are insurers or startups that want to make it happen, happy to have this discussion.
Thanks. It was a good reach out. I think for everyone indeed attending and listening, we're happy to connect you all to the speakers or to people in the audience that you weren't able to catch up on by connecting them directly. Thanks again for joining us and looking forward to see you again in the next session. And don't forget that you can use the networking if you want to connect to any of the other participants. Have a great day and see you all next time.
Thanks a lot. Bye.
Thank you. Bye-bye.
Bye-bye.